All right, and welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you're not done so already, please give the video a like, subscribe, comment, etc. Come find Jason on Patreon. Come find me at carnivoretrades.com. Anyways, yet another week of selling here. We did finish off the lows, as you can see, on the intraday on Friday. I'll flip over to the intraday here. So we were selling off pretty sharply. Then around 1:30 in the afternoon, we got a little bid, kind of a micro bull flag here, and then massive buying here into the close. Now, a lot of the time I would just attribute this to OPEX games, but I do find this significant because if we take a look on the weekly, and you can see it here on the daily as well, but that little bit of buying here in the last 2 hours or so of the day saved this tail candle on the weekly time frame, which is very, very important. It means that that level was defended. You can see that pretty much across the board here. Triple Qs, the same thing. They saved that level. So it is significant. Now, it could be OPEX games, but we'll find out on Monday if the market all of a sudden, just dumps back down and goes back down to the lows. Well, we know that that was probably OPEX games, but you really have to take this tail candle out in order to really prove that. And I don't think that happens right now, given the oversold nature of the market. And there are some positives out there too. For instance, if you look at some of these smaller, ETFs and sectors, look at XBI here. So that did not make a new low this week. Neither did the Russell 2000. And I actually really like this level here on the Russell 2000, previous all-time highs. And then you have a trend line here going back to 2016 that got hit, and it's getting a bounce off that. It's getting defended right now. So when I see small caps and certain other leading sectors here, IGV, cloud software, not making new lows, semiconductors not making new lows, making a higher low potentially, it does suggest that there's a little bit of money flow into risk assets, at least in the short term, possibly short covering, but that is enough to lift the market sometimes, and it is a good leading indicator. What we're seeing now is the selling has rotated to big tech and large caps. Walmart getting punished on earnings, Target getting punished on earnings, and Costco getting hit in sympathy with these names here. So the market's realizing, oh wait, this inflation's actually hitting these retailers now. And it's not just inflation, it's the supply chain problems. Even if the inflation wasn't hurting them, if there's not stuff on the shelves to sell, that's going to hurt your bottom line at the end of the day. And then we're also seeing the big tech selling off here. Tesla hitting new lows, actually retracing 50% of the highs now. Pretty amazing move there on Tesla. Apple getting hit very hard as well. Been a weaker stock, although it did hit a good level this week. So there's another reason why I think that I've been saying this for weeks and we just haven't had it, but there is fuel for a rally here coming, and it's going to come. It's just a matter of when, but here we are. Nice level there on Apple, hit previous all-time high, and it got defended. So in the near term, again, there's a lot of things coming into strong levels here. You can see Microsoft, even another big leading stock on the weekly. So hitting this pivot here, and again, a previous all-time high. You had a pivot, this kind of back tested there. So, there's a lot of things coming into good levels. So at the current time, yeah, the market's oversold. Yes. Is it coming down hard? Yes. But again, at some, nothing goes down in a straight line. Nothing goes up in a straight line forever. And, at some point, the rubber band can only get stretched so far. We talked about the triple Qs. Last week, I said we hit a 50% fib. We did do that. You can see that right here, and it's still been defended. We did have a little bit more downside this week, but we closed off the lows, so they did defend that. If you look at the spiders, this is very significant as we hit a 0.382 fib with the 380 test on Friday. So we tested 380 on Friday. We hit a 382, and not only did they save that tail candle, but they saved the 382 fib as well. And we've been talking about this trend line, obviously, going back to 2018, which has gotten tested. And we'll see if they get us a bounce next week. So there are, a lot of things coming into some good levels here. And again, we'll just take it one day at a time. And Jason actually tagged me in a tweet earlier this week, and I thought it was really good. I retweeted it, and it's, basically bear markets are about capital preservation, right? So the name of the game is not losing money. Play it close to the vest right now. Don't overload yourself into any one position or any, don't be in too many positions at one time. And You got to take gains sooner, especially when you're swing trading in this market. You don't look for the big gain. Be more satisfied with a smaller gain, because this market can turn very quickly. Anyways, another sector that was very weak was the Dow Transport's rotation into selling here. Came this week very sharply on Wednesday, as we got absolutely roasted here. Now, it did come into another good level. So a lot of things coming into good levels. You had a previous high here, good pivot, little back test there, and it did come into that. So, Dow Transport's into a good level. They did get sold off very sharply. And on Friday, they managed to close green with that final kind of push that we got. You can see the intraday there coming off the lows and then getting a nice squeeze into the close as well. So, maybe we can get some type of a relief rally here. But again, like I said last week, we're looking for a relief rally. We're not looking for a major bottom. We're not looking for all-time highs. We're looking for a good counter trend rally where we can take out maybe this pivot high and maybe go up into that 420, mid 420 area. But, which is a tradable low, right? So it's a tradable low, it's a tradable bottom, but it's nothing that we would expect to last for a long time. Anyways, let's move over to rates here. So rates, this is another reason why we could put in a potential short-term low here. As we talked about last week, we had that really good reversal candle on the weekly. It didn't close below this green bar low, but we did this week. So we finally got follow through on that pattern there on rates. So I think it's headed down to 2.5 and probably that 20-week moving average ultimately. That is kind of the downside target here. That doesn't mean it's the low, like the low, but it's a good tradable low here for rates. You can see TYX, same thing. They did save that green bar low, but either way, a pretty good reversal there on the 30-year. And you can see TLT did actually make a higher high, just by a few pennies, but it still made a higher high. So again, a small technical victory there for TLT. And again, I think yields are probably going to go into backing and filling mode here over the next couple of weeks. Financials here, pulling back again, like the spiders though, a little bit weak here. It did lose that 100-week moving average, but you do have a previous all-time high that you're coming into. So even if there was a little bit more downside, I'd say that this is coming into a pretty strong level here. Also, like the spiders, you hit a 382 on the XLF with the last 2 weeks, and it was defended. It's not getting a huge bounce yet, but there's still the door open for a good rally here. They did save this tail candle, so maybe you can catch a bid next week and have some type of counter trend move. Same thing with the XBD here on the broker dealers. This good area of chop here was a level. It got hit and it retraced a little bit, but it was defended. So we'll see if it can catch a bid. I will say though, if broker dealers loses this pivot, which I do expect it to, it's not going to happen right away. It may have to come up and have a counter trend bounce first, but there's no support. So that's the problem when you have these types of moves and it just goes parabolic. On the way down, there's no support areas. This is really your last big one until really you get down to this previous all-time high here and this big gap that I do expect to be filled at some point. So just be aware of that. Again, we're looking for a counter trend bounce, nothing really more. But anyway, it is hitting a nice level here in the near term. So we could see a short-term kind of rally here, maybe a couple of weeks or so. Moving over to energy. So crude, it's holding up, nothing significant. It's amazing how range bound it's been over the last really couple of months, ever since that big spike. Really all you got to do here for crude is it's holding up well on the weekly, but if we get a weekly close above 112.93, that would take you up to 120, 125. And if it loses this 20 moving average on a weekly basis, it's going to go down to probably $85, and that would be a good test area. It's pretty much, my analysis hasn't really changed on this in quite some time because it has been so range bound, but it is holding up. Just like XLE did make a new 52-week high this week, so very impressive, but it did back off of this trend line. The one thing I will say about energy here is if we do see more selling, which I do expect, we see margin calling, these investors won't be able to hide out in XLE forever. Everything will come down. So just be aware of that. Just because XLE is a strong sector right now doesn't mean that it can't come down. It will come down when there is, margin selling and, they say systemic risk, stuff like that. So just be aware of that. But it is a strong name right now and it's holding up pretty well. Let's talk about uranium. So CCJ did continue to bounce this week like I expected. There's a nice trend line here that it tagged on last week and it's continuing to bounce off that. You're into a little bit of resistance here with these moving averages, but nothing to say it can't catch a bid here, maybe up to that 2660 area. Especially if the market gets a lift and everything is really oversold. So we'll see if that holds up. URNM, a little bit more of a muted bounce. CCJ is just a stronger name and more liquid, but it did, they did defend the lows here. We had a nice little morning star reversal, and it's holding up here, trying to flag for a move potentially back up into that 73 range. So we'll take a look at that next week on the URNM. Nat gas, again, holding up pretty well. If this does roll over, it did hit that 850 area. I was looking for it to get up to about 865, 866. I'm not sure that it does that right now in the near term. But if it does roll over, it will have support right around this trend line here. You can see that trend line goes back quite a while, and that's been a good area on both sides. So it's been a good support area. Then when it broke, it was resistance, push through, support, support. I do think it will be support again if it comes straight down, which it can. Nat gas is a very volatile name. And then you have this 50-day moving average, right, kind of coinciding in that level. So that would be a good area for a bounce on nat gas, but we'll see what it does here. It is ultimately a very volatile asset, as you guys know. Dollar index. So finally broke through this 20 moving average on a closing basis, a daily closing basis. So we have done a little bit of technical chart damage on the dollar. And you might say, well, yeah, it's still trending up. It is, but when you go parabolic like this, the first sign of technical damage is usually a sign that it's about to pull back. You can see this very steep trend line was violated. And again, going into, this monthly double top here, and I say to you guys all the time, just because it pushes through a level here and makes a higher high doesn't mean that it's going to break out. A lot of the time when you have these big levels, especially on a monthly basis, they'll pierce through it first, and all the suckers will jump in and say, oh, it's a breakout, and then they bring it back down. So I do expect the dollar, just like yields, to be in backing and filling mode here. Support areas on the downside would be $100, and then if you got through that, it would be about 99. Those would be your big levels there for the dollar on the downside, but I do expect it to need some consolidation and go into backing and filling mode, which brings me to my next thing here, gold. I really like the level that gold hit this week. I liked it so much we picked up GLD call options on Monday, and we turned those into a profit on Friday for just under 21%. So it was a nice trade for us. I wanted to hold it. I still love the pattern that it's doing right here. But going into the weekend, and like I was saying earlier, you can't get greedy in this market. You got to take gains a little bit sooner than you would normally, because this market could turn. There could be news out of Ukraine. There could be over the weekend. I don't know what's going to happen. And last week was OPEX week, so there could be things get bids that aren't supposed to get bids, and they could sell off on Monday. There's a lot of factors that go in here, and I don't want to let a winner turn into a loser. But anyway. You can see here gold came into this level. I told you guys 1785. That's what it hit. And what I was basing that off of was this green bar low here, 1788, spot 50. And we got down there exactly 1785 to the penny. It actually happened in the overnight. But I picked up gold in the morning. We got a little 1-2 consolidation, then a pop. And I like this little hammer candle inside of this green bar that you put in. And if you look at the 4-hour, nice little bull flag in there. So I think this can get up to possibly, 1875, somewhere in that range in the short term. So I like the pattern still for gold. But to me, I just, why am I going to turn down those gains and possibly risk that in the weekend? Got to be smart in this market. But all things considered, I do like the pattern for gold here. And if the dollar continues to pull back, it's obviously going to give gold a lift. So all things considered, I give gold the upside bias in the near term. Silver, on the other end, is a little bit weaker here. Now, it still can catch a bid if it consolidates. I think to 23, maybe 23.50. But I think, honestly, guys, I think silver is headed lower here. In the kind of big picture here, it doesn't mean it's going to go straight down. But I think it's got to test lower prices moving forward. And I just don't like what you did on the weekly there. And if you lose these pivots on a monthly close, it's probably going to head back down to that 1850 area. So just be aware of that. But it is oversold short term, and it's probably due for a bounce. But overall, I don't like the weakness. I don't like what it did on the weekly. I don't like how you had a nice bullish pattern here, and then it really failed to break out, and then it just kind of broke back down. So overall, it's short term oversold, but so it can get a bounce, but I'm not liking the big picture here in the medium term for silver. And same thing with platinum. I still think that has to test lower prices. And same thing with palladium here. A little bit weaker, kind of broke this trend line and failed the back test. As far as copper is holding up a little bit better, seems to be holding up more like gold. So maybe a shot at 440, 450 in the near term. I still think it has to go down and test that $4 handle though. So we'll see what we get out here, but it has held up okay. And then lastly, these potash stocks. So IPI here. I liked that. I told you guys last week, I liked that level. It did come up here, but again, it was a victim of the selling. And like I was saying with the XLE, when margin selling comes in and the broad markets are dumping, nothing's really safe. So, you know, these stocks here, IPI, MOS, I like the levels, and these actually still can get bids next week. I might reevaluate this next week, but when the broad market is selling off, nothing's really safe. So these are victims of this is a victim of margin selling and forced selling and OPEX games. But overall, the levels are holding up okay. So these could still get a bid over the next couple of weeks. And I still like the levels that they hit last week. But you're seeing firsthand here what happens when you just have broad-based selling in the overall market. All right, and then finally, Bitcoin here. So Bitcoin obviously still holding that tail candle. I still think there's a lot of demand down here. If we look on the, when you have a tight range like this, sometimes I just flip into the hourly. And basically what you're looking for is if you break down below this level here, you're probably going to go down and at least retrace to probably 26,000, maybe a little bit lower, but I think there's a lot of supply, or excuse me, a lot of demand down there. And I don't think that these lows break right now. If you break above that, which I do think probably happens. If you do break above that, I give it the upside bias to about 34,000 in the near term, and then 38,000 would be kind of your max upside. But I do like this tail candle. It does signal a possible like short-term capitulation. You got heavy volume there with a nice candle in a key level that got saved. So usually you get kind of a reflex bounce from that, but sometimes you also come down and test the lows again before you make that move. So that's kind of what I'm seeing here. I don't expect this tail candle to break on Bitcoin anytime soon, even if it does get tested. But essentially, you're going to look for these levels here. If we break through this kind of channel, then it will get tested. If we break on the upside, then you'll have some resistance at about 34,000 and obviously 38,000 on the upside. So that is kind of what I'm looking at there for crypto. In any case, again, as far as the overall market is concerned, you know, we're still looking for some type of a counter trend rally. You had a nice bounce on the weekend. Some of it could be OPEX related. It's possible. But bottom line is they did save that tail candle. So on the upside, you'd be looking for 410. That's going to be good resistance. You got a gap at 411. But if we do, you know, break through that and make a higher high, you're looking at 420 to 425 on the upside as potential targets here for the spiders. Anyways, guys, and wrap it up here. Thanks for watching. Take care. Come find Jason on Patreon. Come find me at carnivoretrades.com. And I'll talk to you all next week.